Hey guys, Israel Favela here with Clearview Realty. I'm a real estate agent out here in El Paso, Texas, and I'm excited to bring a good friend of mine, Edward Araujo, who's a business owner here in El Paso, Texas, and owns Texas Consumer Credit Services. And basically, what he does is he's a problem solver. So he runs into situations where people are trying to fix their credit. He individualizes a plan for them specifically, and then tries to come up with a plan whether they're trying to, purchase a home, increase their credit because they want to buy a vehicle, or just be in good standing with their credit. He individualizes the process so that he can help them develop a plan for them individually to increase their credit score. And one of the things that I appreciate about Edward is that he sat down with me at the beginning at a Starbucks, and he was explaining to me the process that it takes for you to actually repair your credit. And there's so many people out there that are trying to help people out and maybe even sometimes scamming people. But it's important for you to be informed. So this is why I'm excited to bring him on. But I want to give him an opportunity for him to introduce himself. So, Eddie, why don't you tell us a little bit about yourself, man?
Well, first of all, thanks for having me on. It's been a while since I did one of these, and I really enjoy doing these. So thank you. Like you just said, my name's Edward Araujo. I'm the founder and president of Texas Consumer Credit Services. I'm also what they consider a credit expert, a published author on credit. Um, I've been in the credit financial space for about 15 years. I started this particular company in 2014 as I really saw a need for our services, especially even localized here in El Paso. I don't know if you know, we have some of the worst credit scores, and not only in Texas, but in the US. And I really think that credit, really financial literacy is really important. And it's something that me growing up, my parents tried their best, but weren't really, they don't teach us this a lot in school. So it really intrigued me. And that's really what I enjoy is the education part of it. Um, because your credit impacts just about every aspect of your life.
Mhm.
And just those few couple of numbers, as you know, can be the difference between owning and renting.
Right. Exactly. Yeah.
So,
No, man, I appreciate you coming on here, man. But we'll jump right into it, and we'll start off super basic. Let's just start off with what is credit? Like what impacts it? Can you give us a little bit of
yeah.
that?
So you have your credit score, right, and basically your credit report, right? So your credit score is a number that's basically gauging your risk factor.
Mhm.
Almost like the definition almost is it's gauging the likelihood of you defaulting within the next 24 months.
Okay.
Okay. So they assign that number. If you're at a 500, let's just say you're at a 50-50 chance of defaulting, basically, right? And as your score gets higher, closer to 800, you're less of a chance. So it's
Okay.
basically gauging your risk.
Mhm.
Now, your credit report is that record, okay? Like you have a driving record, a criminal record, whatever it is, it's that record of how well you handle your credit. So there's five major parts to it, 35, 30, 15, 10, and 10. So real quick in the summary, the biggest part, 35% of your score is your payment history, right? How well do you pay your bills? So if you've got derogatory items, you've got late payments, if you had a car repossessed, those are what impact your score the most, collections things, right? Most people kind of know that. If you've got that's going to impact your score. The one that a lot of people don't realize is the second biggest part, 30%, is what's called your indebtedness or balance and burden. Um, you have two main types of accounts, installment and revolving, basically like a loan, like your mortgage,
Mhm.
or revolving, which is basically credit cards, right? Well, of that 30%, about 90-ish percent of that is revolving credit or credit cards. Okay. So a lot of people make the mistake, especially here in our demographic, that they don't want credit cards, which is okay for budgeting. But then if you think about it logically, the credit algorithm, the credit, FICO doesn't have anything to gauge you off of if you don't have credit. So having at least three credit cards is vital, or else you will be limited in how high your score can be. But the most important thing is once you have a credit card is your balances. Okay. That is one of the first things I look on a credit report. Okay. If to make the numbers easy, if you have $1,000 credit card, a limit, you want to keep that under 10% or $100. Now you'll hear that 30% thrown around a lot. And it's good. If you're using over 30%, if you have a balance over $300, you're definitely hurting your score. But between 10 and 30, you're not hurting it, but not necessarily boosting it. So I always tell all my clients, we kind of always take off that zero, right? If it's a $500 card, like you got to get in your head that your limit's $50. Okay. And not, I don't mean use 300 and then pay it down to $50. I mean, never carry a balance over $50. Okay. Because they're going to be watching that. I've seen scores drop 100 up to 100 points. Not a late payment on the credit card. They just maxed it out. So just those two parts are 65% of your score. The third part, 15%, is your age, how long you've had credit, right? And then we got 10 and 10, you've got your credit mix. How well-rounded are you? So, do you have a mortgage and then a vehicle and some credit cards? And then the last part, which sometimes people think is the biggest part, are your inquiries. Okay. They're only 10% of your score. I posted something on my story earlier today that actually an inquiry, a hard inquiry, only impacts your score for 1 year. Okay. And it'll be on your report for 2.
Yeah.
But it's only impacting your score.
I'm sorry to interrupt you. I'm sorry about that, but
no.
It's just I do hear that a lot whenever people are wanting to shop for lenders, and a lot of times they don't want to shop around because it's going to drop their score. And granted, sometimes they're like teetering that borderline of being able to qualify or not. But yeah, that's a good point that you're bringing that up. I just wanted to.
And it's understandable. People get scared, right? But also the good thing is, there's 3 different main types of inquiries: mortgage, auto, and student loan. The student loan not so much anymore, but mortgage and auto. They do what's called deduping on them, meaning they will group them together within a certain time frame because the consumer kind of has the right to rate shop, right? So if you go to 3 mortgage companies, that the time frames vary depending on what score and everything, but it's good, easy to say, like within a month, you will see all of them on your credit report, but they'll weigh them as one.
Okay.
Right. So if you went to one mortgage lender today and one tomorrow, you're gonna get the initial impact of the first one. The second one's not going to change anything.
Okay. Because
they're going to group them together. It's still a good rule of thumb to not be applying for everything. It still is 10%. But sometimes people are so weary about the inquiries, but have a maxed out credit card. Right. Yeah. So that's where the education part comes along, just knowing what affects you more than something else.
Right. Okay. That's a good point, man. And then I think we were discussing one of the parts about the credit. You were saying, gosh, what was the second one that you were mentioning? It was about 30% that affects
it's your indebtedness. What people associate it with is your utilization, your credit utilization. Okay. Right.
So I just had a question about that because I've heard different stories. Like if you want to start off your credit, what you can do is you can put like your streaming services on there, like Netflix and stuff like that. That way you can kind of have something revolving, like you were talking about. What in the event, like let's say for instance, your Netflix, it's like $15, right? Let's say at the beginning of the month, it's charged on your credit card, and then you pay it the next day, and then you have a balance of 0 whenever the 30 days pass. Does that have any effect of like building up your credit score? Or should you leave a small balance all the time?
Believe it or not, it's actually better a very small balance. Okay. Like if you want to get real technical, like we've had files, let's say with the realtor and a lender, where we need like a point or 2. Like if you carry a 1% balance, that's going to maximize your score. I mean, that's like getting real, right? But if you just keep it under 10% with the small balance, that's fine. So you don't have to pay it the next day. You actually want that, $14 to report or whatever it is. And then you want to show activity every month. So that's why we recommend something like that, right? Like a subscription, like a Netflix, because you're showing activity every month. You're never going over that 10%. And obviously you're always making your payment on time. So that's ideal. That's what we coach our clients to do. That's what I do personally. And if you do that with 3 credit cards, you'll maximize your points in that area.
Right. Okay. That's a good point. So moving on to, I guess, the specific services that you help. How is it that what type of services do you provide for the people?
So we provide what people call credit repair, although that term gets thrown around real loosely. What we do is there's 2 parts to our program. The first part is where we fight on a client's behalf to try and remove or delete derogatory or negative items from your credit report. Let's say you went to the hospital, you didn't have insurance, they billed you, you couldn't pay it, you have a collection. Okay. Right? So when you have a collection, these collection agencies and the credit bureaus have to follow a bunch of laws and statutes, over 200 consumer protection laws. Okay? But the reality is about 70, close to 80%, I think it's 79% last time we checked at the time, they don't necessarily follow all of those laws.
Mm.
Yeah. They know most consumers aren't really educated and they're intimidated, right? So they will try to intimidate a client. They will put verbiage in a collection letter. They will call you. They will update dates on a credit report. So our job as experts is to go in there and audit, investigate these accounts, find either errors, violations, or even ask them to prove verify these accounts.
Mm.
And if they can't, then that's where we come in and we try to fight with them to get it removed.
Okay.
So it's not about, because you'll hear Credit Karma, you can just dispute something. Well, you can't just dispute something just because you don't like it on your credit report, right? You
Mm.
have the collection. Nothing about credit repair is lying. So you'll hear these things, claim identity, that these things. None of that is legitimate credit repair, right? It's about going in, and that's why you hire like a realtor, right? Because you know the ins and outs. You know you're gonna protect your client. You're gonna look out for them, just as we do. You could fix your own credit, but really, do you know the FCRA, the FDCPA, what to look for, what's a violation or not? You may know if it's a wrong balance or a date, but not all the other laws where we go in depth and look at those, find those errors and fight them. So that's the main thing we try to do because that's the biggest part of your score, right? It is the removal of derogatory accounts. Okay, that's the majority. The second part is the coaching and education part. So remember, we talked about those 5 parts.
Mm.
When a client enrolls with us, we're going to do an audit and we're going to create an action plan for them. For example, you've got 10 collections. We're going to work on trying to get as many of those as we can removed, but you don't have any credit cards, for example, right? Here's some that we think you should apply for, or you have some, you should pay them down to here, right? So whatever we see, the second part is going to be coaching them, because it's 2 parts: us removing the derogatory accounts, but it's also about rebuilding and adding and managing the positive credit.
Right.
Doing those 2 things together is how we can maximize the results, because one without the other will get you some results, but it's like going to the gym but not worrying about your diet at all, right?
Yeah.
You're going to get some results, but to get the best results, you have to work on both, because there's been times where we'll remove accounts and now their score may even drop or not even have a score because now they don't even have any credit.
Right.
Right. So that's our services. The main part where we focus on is we're going to fight on your behalf. We're going to represent you against the credit bureaus, the collection agencies, and try to get these accounts removed. Now, we're not saying they're not yours. They can be yours and not paid. We're not debating or fighting the fact that you owe or not. We're fighting the legality of them being able to report on your credit report.
Got it. Okay.
Because your credit report is just a record. It's voluntary. Nothing has to be on there, with the exception of like child support, certain things that they have to. But if you owe a finance company, you ain't got a loan, it's up to them if they want to report it or not.
Okay.
Right. So if they do, they have to follow all of those. If
Mm.
they don't, that's where we come in and fight. We're going to say, yep, it is. It's his. He owes it. But this is a violation of FCRA section, whatever it is, and try to get it off.
Right.
So that's technically what credit repair is.
Okay. And then you just saying that, man, I feel like if people would know how much in depth you really need to be in order for you to be able to fight certain, make certain disputes, and how thorough it needs to be, I think people would be a little bit more choosy on who they select that are going to
Yes.
help them out, because anybody on the internet can offer their services on Craigslist, on Facebook, and say they're going to help them with their credit report and use the term dispute, just the term itself, saying that they're going to write letters. It just kind of like, oh, you're doing that for me, right? But basically what you described, I feel like that's exactly what people need to do, even if it's just like for them just to be able to do their own research and making sure that they know who they're selecting, knows what they're doing. But I'm glad that you brought that up, man. I want to ask you another question. What do people misunderstand most about choosing a credit repair person and working on their credit?
A lot of it is going to be the expectations.
Okay.
And it's about setting realistic expectations, because like you said, in this day and age of social media and so much information available, I'll see some claims of, first of all, we as a license, credit repair, we're called a credit service organization with the state. It's like a lawyer. We cannot guarantee anything, right? I can't guarantee your score is going to go up specific score. I can't guarantee specifically an account will come off. It's like a lawyer. We can go off of statistics and what we're going to do. So I see a lot of people guaranteeing your score is going to go up this much. We're going to do this. It's going to happen overnight. And they hear a lot of this. And since our industry is still relatively not well known, it's like if they went to you and they're like, well, I'm not going to hire you unless you can, well, sell your house right now, probably can happen in a day. But let's say, right. But let's say getting the mortgage on, like if they went to a mortgage lender, like, well, we got to close like by tomorrow morning. And you're like, that can't happen. People don't realize that this didn't happen to their credit overnight, right? Now, it doesn't take years, but on average, our client takes 6 to 9 months, for example. Okay. I've had clients in 3 months, 9 months. It depends because we don't know. We're dealing with third parties, how many violations. So they have 45 days to respond. We send out a dispute. We got to hear back. Sometimes it'll just be a generic response and we got to ask for proof. So it's a process.
Okay.
Right. And what I hear a lot of times is like 100 points in 90 days. And, there's some red flags. If they're ever telling you to claim identity theft when you don't really have identity theft, if they're telling you just to buy these trade lines, if they're charging you all up front, there's certain things to look for. That's what people should be looking for. We're not the only great company out there. I'm in the industry. I've been in the industry for a long time. There's a lot of great companies, Texas, throughout the U.S., everywhere. It's just asking some of those questions, right? But those would be the main things that the misunderstanding when I hear from people is that sometimes their expectations are unrealistic, right? They want it to happen overnight, or they say, well, I'm not gonna, you got to guarantee me these accounts are going to come off. That'd be like asking a lawyer, I'm not going to hire you unless you guarantee I'm going to be innocent. Right. It's not realistic.
Right. Exactly.
Right. And so that's kind of some of the things we hear sometimes.
Yeah, and that's where, like what I was saying about how you really individualize and come up with an action plan for each one individually, because what could be one plan for another person may not be the same thing for another one, because you're breaking them down of what affects your credit score, right? So if your debt is really, for one person, that's what's dropping your score, may be different for someone else that, their score is low because they have collections or whatever the case may be. And they may be the same score, but, increasing them is going to be a different plan for each one, right?
Yeah, that's exactly. You can have two people with the 550, but the reason it's a 550 can be totally different.
Okay.
Right. Some just have a lot of collections. Some may have that high utilization. Some may have no credit. It's real important. That's why we do a consultation and we go over their credit report, because there's no blanket. I mean, there's a couple things you can say. If your credit card balances are high, pay them down, right? But a lot of times, let's say there's a collection on there, or a couple late payments, but it's the oldest account on the file. You're going to have to weigh how much of an impact taking off the oldest account is versus a 30-day late payment that's 2 years old, that the impact may be minimal. Right. So it's not just a thing of go delete everything, go do this. You really have to analyze that credit report and come up with a game plan for the client and a game plan for us of how we're going to attack these accounts.
Right. Okay. Sounds good. And then this is basically a question for anybody that's watching, because I know everybody has their own individual reasons why, their credit's a little bit lower than the others. But if there's anybody that's listening to this, if there's any sort of questions about your credit repair as to, if it's low for certain reasons, if it's questions that we can answer through the comment section, go ahead and leave some comments below. But if not, we always have Eddie to answer those questions if you guys want to get a consultation with him. But Eddie, I have another question. What's one lesson in your job that has taught you that you think everyone should know at some point in their life? I know it's kind of like a general question, but
as in like business me or more related to credit?
More related to credit, yeah.
The importance of it. Okay. People don't realize how important your credit is. They only associate it with, a lot of times they don't worry about it until probably they get to you and they want to buy a house, right? But they don't know how it's impacting their insurance rates. They don't know that maybe why didn't they get that certain job and this other person did? Okay. They check your credit for all of that. I was speaking to an insurance person the other day, and this was something that made me really realize the importance of credit. She had 2 clients, one that had like 2 DWIs and an 800 credit score, okay? And another person that had a perfect driving record, but like a 580 credit score. Guess who got the best rate?
You tell me it's
The
the
DWI guy,
mhm.
because it's so heavily weighed on credit,
Yeah.
right? So if there's anything I've learned, it's the importance of credit and the education part of it, because especially I'm Hispanic, I believe you are as well, right? We were raised with this, pay everything cash and do this, and debt is bad. And yes, but we need to learn there's good debt. Like when I tell them to get these 3 credit cards, like, well, I don't want to go into debt, and they start asking me what's the interest rate. Those are the wrong questions. Okay.
Mhm.
Because if you're going to pay off that $14 Netflix every month, it doesn't matter if the interest rate's 100%,
Right.
right? It's when they don't know how to manage them, they start getting in trouble. That's the thing. But
Right.
that's the exact thing that they want to gauge you on, is that you can have that credit there, be responsible with it,
Right.
right? So there's certain good debt. Your home, for example, right, is a debt,
Mhm.
right? Sometimes people say, I'm going to buy everything cash. I'm like, are you going to buy your home cash? Because I mean, So more than anything, I've learned that people, we lack financial literacy. I think in my opinion, we lack financial literacy. Sometimes I make jokes about it. Like, I don't know when the last time I used a Pythagorean theorem was, right? But people don't know what their credit utilization is,
Right.
or even those 5 parts, just those simple 5 parts. Sometimes I think I don't explain it sometimes. Like, you get used to like certain things that in real estate, that, oh man, I feel like I'm repeating myself, but people don't know that.
Right.
Just those simple 5 parts. And if they just knew just what we went over in this call, they could change. I don't mean to be dramatic, but their life, right?
Right.
Because someone just hearing that, they're like, oh shoot, well, it's only a $200 secured card. Now, let me pay down, even if it's maxed out, right? $180.
Mhm.
And their score could go up 50 points. And now they could, instead of paying 26% interest to Santander when they want to go buy a car, get a 5-6% interest rate and save hundreds of dollars a month. Their insurance, get it requoted. So that's what I've learned, is that there's not enough education about credit. It's kind of, I don't know, it's not taboo or whatever, but, and also because people don't want to talk about it,
Yeah.
right?
Yeah.
You guys, like when you guys close on a home, oh, everyone posted and they're doing this. It's hard for us when we fix someone's credit. They're not out there like, oh, my credit was, excuse my language, crap, right? And now it's like, you know, but yeah, that'd be the most important thing.
Yeah. No, that's so true, man, when you put it that way, because there's things that are socially acceptable to celebrate, and there's things that are like not as socially acceptable.
Mm-hmm.
Credit one is like people are way less inclined to want to celebrate, because it is a big thing, man, because I know that, I'm sure there's a statistic out there that maybe about every person experiences about one or two financial crises in their life, right?
Mm-hmm.
So I mean, it's inevitable. We're all going to experience it, but yeah, it is difficult for people to celebrate that. But that's a good.
Yeah.
So the next question, Eddie, that I have is, what's the biggest challenge you faced when working with your clients? I know we kind of touched up on that, but is there anything additional that
Yeah.
you have?
In addition to the expectations, it's going to be the accountability. Okay. Um, I know that me and my consultants in our company are going to get certain results. Obviously, there's some cases, and I'll be honest, we can't help, or sometimes we don't get the results that we're used to getting on every file. Right? Let's be transparent and honest, right? But for the most part, we know we're going to get accounts deleted. We know we're going to fix certain things. The hard part is, and we've developed systems around this, is keeping the client accountable on their part. It's kind of like, if you're going to hire a trainer, you got to be okay with them yelling at you and pushing you,
Mhm.
a certain way, right? So when we get results back, we do what we call a file review. So sometime between 40-45 days, we're going to pull a new credit report, and we're going to generate a report, and we're going to say, okay, this was deleted, this, but we're also going to look at, and we're going to remind you, hey, you haven't added this credit card, or hey, your balance went up instead of down. Hey, you got a new inquiry, right? So that's one of the biggest hurdles, I think, and that we've been trying to work on it. And that's why we have those file reviews. That's why we try to do follow-up calls. We do things because I can remove accounts all day. Okay. But if I remove everything and you still don't add that credit, and you get a new late payment, and you've got 100 inquiries, we're not going to make a lot of progress,
Right.
or as much as we could, or get you to that goal of, let's say, a home purchase.
Right.
Right. So part of our enrollment process is kind of letting the client know, hey, are you open are you okay with coaching? And we're going to be on you, and it's for your own good, just like a trainer, an athletic coach would, right? Um, so that's, I think, one of the parts about my profession or industry is teaching. And then it's also, they'll hear something from a tia or tío. Kind of, you probably run into this, right? They said this, and it's like when you go to your doctor, right? We're experts, we're professional. This is what we do day in and day out. Um, so that I would say that would probably be the part is keeping them accountable, keeping them focused, keeping them on track, reminding them why they started this, right? They want to purchase that home, and it's a process, right? That's going to be, it's going to come back. Let's say the ROI, the return on investment on fixing your credit, is one of the biggest returns that you can have, because your credit, like I said, impacts you so much. So keeping them focused, keeping them accountable, make sure they're doing their part is one of the more difficult things, I guess I would say.
Yeah, and then it goes back to what you were saying about the expectations, because a lot of times, not only are they wanting to have a certain credit score by a certain time, but you get other credit repair people that promise a certain credit repair, but there are many different factors that come into play, and you as the person that's trying to fix your credit, you are also the factor of whether you're going to increase your credit score or not, because if you're not held accountable even to yourself, where you're not making your payments on time, you're just kind of shooting yourself in the foot and not capitalizing on what you're
Yeah.
trying to invest in. So
And that's the difficult part. Like you said, I've had clients say, well, I'm on month 7, my cousin went with this person and it was done in 2 months. So, I've had people done in 45 days also. It doesn't necessarily mean your file is the same, right? So that's a big part. We turn people down for our services.
Oh wow, okay.
Right. Because it's not going to be a good situation. Like, let's say my builder reps. I love my builder reps stuff. They want to get someone in the home, and they're like, man, go with Eddie, go with Tex. They got this client in a home in 3 months, right? And then they come to us and they're like, my house is going to be ready in 2 months. You think? I'm like I got to be super honest with them. Say, can it happen? Yes. Likelihood, probably not. We like people to have at least 6 months, to let us do some work. So a lot of times if they say, no, it's got to be in 2, I'll be like, well, maybe we're not a good fit, because me, ethically and legally can't do it, right? We can't guarantee that. And it's not going to be a good situation for anyone, right? They're going to put some money in, the builder's going to be on them, you, the realtor, the lender, and then us. It's not going to be a situation, right? So we've had people, or when they ask, certain guarantees or something. So we've turned people around that maybe they're not ready yet, or let's say they're currently late on everything. Like, they can't make their credit card payments right now. I'd rather tell them, you know what, get that kind of in order, because if I'm taking accounts off and you're still getting late every month, I mean, we're just going to be spinning our wheels, right? So sometimes in our consultations, it's more of a, here's a game plan, do these things, and then come back and see us at this point. And we can't help everybody, unfortunately, sometimes, right? This isn't a magic wand. I don't have a magic button. I can say, hey, these accounts come off. Like, they'll ask me, can you take this one off? Anything can potentially come off. Right. And now I can tell you that medical bills, we have a higher deletion percentage versus like an original creditor credit card. We can tell you those statistics, but that still does not guarantee that that particular item will. So that's, those are some of the things.
Okay. That makes sense, man. And one of the last questions that I have is, what are the top 3 takeaways you would like for people to leave after watching this video?
So number 1, like I said, is just start, at least pull your credit report and your score, and not from Credit Karma, right? You're gonna have to get some type of paid monitoring. We use Smart Credit. I really like it, but you can, anything where you're gonna have to pay to get your credit report, and at least get familiar with it. Okay. It's kind of like a lot of people also just avoid these things because they don't want to face it, right? Or look at it. So the first takeaway is just realize your credit is important, and at least pull your credit report and see where you stand.
Right.
Okay. The second takeaway is, if you can just learn that part about the credit cards. That's one of the main things. First thing I look at on a credit report. Do you have credit cards? And if so, what are your balances?
Okay.
Because people know you got to make your payment on time, right? So that's a general rule of thumb right now. If you're watching this and you don't have 3 credit cards, you need to get to 3 credit cards. Okay. And you're going to start with secured cards, right? Where you put a deposit. Okay. Don't worry about the limits right now. A $20,000 limit and a $200 limit, the credit scoring algorithm doesn't know the difference. Like if you have an Amex and a secured whatever card, your score doesn't go up because you have an Amex.
Okay.
Okay. Now, if you have a $20,000 Amex and you have a $19,000 balance, that card's going to hurt you more than the next person has a $200 secured card with a $20 balance.
Okay.
For your score. Now, if you're going to go try to, like, for example, you can't get certain credit cards unless you have $5,000 limits and stuff. Now we're talking about advanced, getting into rewards cards and stuff. But speaking specifically on your credit score, it's binary. Like it's a mathematical formula. It doesn't say this is an Amex. It's a revolving line, and this is the limit. So that's one of the takeaways I always tell people. Yes, they can be scary, but just know the importance of credit cards, and that they're important. The third takeaway that I would like to let people know is that our industry's had a bad reputation. It's getting a lot better.
Right. But
and like any industry, there are people out here to help you. Okay, we're a very heavily regulated industry. People don't realize that we're regulated by the Federal Trade Commission. You got to be licensed. There's state laws. There's federal laws that we got to follow. And it happened because there was a low barrier to entry before to start a credit repair company. Now, if you're a legit credit repair company, it's not even that easy. Like, let's say we take credit cards from clients. We're considered a high risk industry, basically because we fight the credit card companies, right? So, it's expensive to operate legally. And I think that's also sometimes for small business owners, they try to skip certain things, obviously, right? So just for people to know that we're not the only, we'd love to help you. If you want someone local in Houston, I'd be glad to refer you to people that I know there that can help you or whatever the case may be. But to know that there is help out there. Credit repair is 100% legal and legitimate when done the right way.
Right.
Okay. So if you're having issues with your credit, seek out the help of a professional. You can call us. We'd love to help. Like I said, if some people want someone local, I can refer you to someone. I know people. We're a member of NACSO, the National Association of Credit Service Organizations. So we can help you at the very least get consultation.
Right.
And you might be surprised. It may be worse than you think. It may be better than you think. And you may just be a few tweaks away, from really changing your credit score.
Right. Exactly. Yeah, no, I appreciate you coming on here, Eddie. Where can people find you in the event they want to start working on their credit?
So real easy, if you go to texasconsumercredit.com, all our contact information is there. You can book a consultation. You can call us if you're local at 915-201-2604. It's available there. Our 800 number, you know what? I'll be honest with you, I don't even remember we call it.
I'll put it up.
And I'll put it up. It's 1-800-742-9700, I think, but we'll post it on there. You can find us on social media. Most of the time it's going to be, the handle / Texas Consumer Credit, Facebook, at Texas Consumer Credit. If you just search up Texas Consumer Credit, be able to find us. We service all of Texas, Florida, Arizona. Our main office, though, we are based here in El Paso.
Okay.
So, reach out. I recommend everyone the consultation's free. The most you're going to do is maybe $1 to pull that, like a trial to pull your credit report, but you'll come away with a full understanding of what's going on, basically an analysis on your credit report. So look us up, social media, Facebook, Instagram, online, or give us a call.
Cool. Thanks, man. I appreciate it. Thanks for your time.
Thanks.